Most of the people, they know how to make money, just some of them knows how to keep them, and very few of them, they know how to multiply them.
We are in the old era of investing, where we have to focus much more on the knitting of investing, which is really looking at earnings, right? Is a company profitable? Does it have a path to profitability in the next 2-3 years? We've already seen the damage that can do, especially within the tech sector, when the answer is no. I think it really behooves us to look at valuations again, and specifically the value factor. What price are we paying for that future profitability? And it really also means focusing again on risk reward. Are we being paid to take risk?
Hey, what's up guys? Welcome back to Millennial Money. Today let's talk about how to invest money this year. I'm pretty sure you know the people that they are saying money returns but time not, so that's why I blow up all money for traveling and vacation. I feel it's not a smart decision because money doesn't return as some people think. Money returns if you invest them, and you have to invest them very properly and smart because you might be losing them as well. Like with everything, it's always important to know why you want to do it. What's your goal? Like, do you want to be financially free, or you want to have a certain amount of money in your 60s, or you want to build something that your kids can have it down the road? It's good to have investment goal because it's just numbers, so you can go through and you can see what you have to do in order to get there. You have to develop the strategy, which is one of the hardest thing as far as investing goes, and you have to make sure you are there for long run. Your investment horizon is 10, 15 plus years. In my scenario, it's over 20-25 years. So when I do most of the investment, I ask myself, does it make sense in long run? You should be thinking about the risk tolerance as well, if there is any tolerance in your scenario, or you like to be in risk, so you have to go through this as well, because then you will pick and choose a different strategy for investing. So let's start with the most common one, which is investing into stocks, bonds, mutual funds, index funds, and ETF as well. And right at the beginning, make sure that you don't start with the trading and do something with the leverage and so on, because most of the people that I know that are investing their money, they don't do it with the leverage. So I don't know anybody pretty much that is making money with the leverage. Obviously there are some people making, but it's in short period of time, but you want to be profitable in long run, right? Trading and dropshipping is the same. There are people more focusing on that they want to sell you some leadership program that you learn how to do trading for $500 a month, and then you will make millions, which is I don't like it. As far as investing into stocks, how it goes, so pretty much you have to make decision, you have to pick up what you want to buy, you have to do your research, you have to analyze certain company, and then you have to ask yourself, does it make sense to buy it right now? Is it good company? And so on. You can pretty much pick and choose value and growth stocks. With the value stocks, it's pretty much the stock that you believe right now it's undervalued because price to earnings, it's this number, or the company is investing so much money into technology. Amazon is known that they invest so much money into other companies that they are building, as a side hustle. Or do I want to buy growth stock, which is pretty much that I believe this stock is totally undervalued and it has huge potential, and later on it might cost, way more than other stock. I feel the most common mistake that people do, that they over diversify their portfolio so much. Even Mark Cuban is saying, if you have 10 grand, don't put 10 grand into hundreds of investments, right? Because the numbers, if it will go up or even down, it might not affect your portfolio. So I'm not saying just buy one stock for $10,000 if it's your whole portfolio, not really, but just, you can pick and choose, maybe 20, it's already enough. Of course, I would not put it into 50 or 70. And even if you do your homework, you analyze your stock and you buy it, it still might be, not the best decision because you did something wrong, or that company just, went bankrupt. What I like to do, which is way easier, is to buy index fund or ETF. ETFs are good, it depends where are you living on, because some countries have ETF funds tax-free. You have to figure out this part as well. How I do it, I just buy it every month, I don't care, I just do it. Whether it's inflation or deflation, or economy is doing well or economy is doing bad, I buy it every month without the emotions, certain day every month, and just keep doing it. Doesn't matter what economy is doing now. It's proven in long run that if you hold it for a while, like in 15 or 20 years plus, it's 7 or 8% of interest rate, which is really good. You can just put the numbers into compound interest calculator, how much you need to invest every month, and you will get there. My favorite one is S&P 500, so pretty much they are the best companies in the US economy, which is over 504 or 505 companies over there. So pretty much you just buy it. And what is pretty cool about the S&P 500, if there is company that it's not performing well, people are gonna just exclude them and they are gonna get a new company that it's already doing well and it meets certain standards, so that way they can accept it for S&P 500. It's pretty cool because you don't have to be thinking how are you gonna be outperforming the market, which is really hard. Like there is Warren Buffett, yes, he's known for it, that he is able to beat the market like in so many years in a row, but you should realize that you are not gonna be next Warren Buffett. I'm sorry, but yeah, that's high probability that you are not gonna be next Warren Buffett. So yes, I own some individual stocks, but mostly I just do this S&P 500, and that way I can focus on other projects. Once you figure it out that you wanna be buying stocks, you just open your brokerage account, do some strategy, research, buy it, hold it, and it's very good if you check up on the portfolio, how it's performing and what are the news. So it's good to be in the circle of investing still. Like once you buy it, it's good to do some research still, or just be reading the news and so on, that you know what is happening. Good to mention is as well renewable energy, because I feel now like governments are so much pushing into it, and they will, because it's important and so on. I know there are index funds that they are just focusing on this kind of companies like green energy and so on. So this is kind of my next homework, to do some research on this, because I feel there are gonna be some good options and so on, and solar. And let's jump into second one, which is crypto. And yeah, crypto is one of the most volatile assets that you might have. That's why I always recommend put 5 up to 10% of your portfolio into it. That way, if crypto is not doing well for you, so you will not lose all your money or anything like that. I think it's good to have some money over there. I was never like Gary Vee, that he's saying, you have this NFT and you show it and it would be like your ID, you can travel with that, you don't need a flight ticket and so on. I was never like that. I was just more seeing that as a speculative investment always. So I was never like, yeah, I'm gonna be paying with Bitcoin in 20 years from now. Maybe we will, I don't know. But I was always looking that this is very speculative investment. There are some opportunities, but it requires heck a lot of time with the research and so on. Again, like with stocks, you have to define your strategy. Don't do any leverage, that I really don't recommend. It's very volatile and so on. I think these days with the crypto, it's very important, this platform that you are using and the wallet, if it's legit, and because there are so many companies and platforms that were bankrupt and people lost their money over there. It's very convenient to start with a small amount of money, and then later on you can do more and more and more. Especially with the crypto, being informed is very crucial. What I like to do is using a Twitter, because you can find so many new projects that are just about to be released and so on. And I found with a friend a couple of projects. They did over a couple hundred person already. So there are some options, but you have to do it, and it takes time. One of my favorite part about the crypto is crypto staking. So pretty much how it works, you own some amount of coins and then you lock them up, and the provider is gonna pay you like interest on that, which is pretty cool because it's kind of like passive income. But of course there are so many projects, and I did see so many projects that they went down, like Titano or Sphere. On the other hand, there is a platform that I've been following for many years, and it's like PancakeSwap. I think they are running for a couple of years already, and in my opinion it's pretty decent. But of course I'm not the financial advisor, I'm just the college kid, so do your own research before you buy something. PancakeSwap is working like this, that you locked your coins over there and you are getting rewards, in the amount of coins, which might be pretty cool if you believe in that coin and so on, that it has some potential. For example, with the cake, what they did, they actually created what can be the maximal market cap. So I think this is one of the projects that might be doing well, but we never know. None of us has the crystal ball that can predict and so on. But I just wanted to mention there are some options to make some money, in the rewards and so on. Because with the stocks we know that we can make money, that getting the dividends and so on. So this is kind of similar idea. So in a nutshell, with the crypto, it's pretty much stay informed, make a good choice, what is the platform that you use, and do your own research. Other strategy is actually investing into real estate, which some people find very beneficial. On the other hand, some people find it as a losing investment. That's what Warren Buffett is saying. Real estate for me is a losing investment because it's so hard to find undervalued house for sale than the stock. Plus, I don't want to be worried about the tenants and that kind of problems. I feel real estate is very good and convenient because if you think about it, like banks are crashing, platforms with the crypto and so on are crashing, some of them of course. But with these, you are kind of hedged in this scenario, because if you buy the land, then the bank goes down, or anything like that. Even if you have the mortgage there, sometimes it might be even better, because then there's gonna be some process, they need to changing the owners and so on. So I'm not saying it's good deal, but I'm saying just, it might. Especially now, like banks went bankrupt, in the United States, or you don't want to be thinking about a brokerage account that your password was stolen or anything like that. That's why I like real estate, because it can be very safe. Of course, it can be risky, but if you do your work properly, I think it's very safe. Because like real estate is tangible asset. What it means, it's physical. It's not like stock that might go under overnight, right? It's proven with the real estate, it goes up in the value with the time, plus you are getting some cash flow every month. And I'm not saying about that your debt is going down with the time and price of real estate is going up in a time. And if you have more of them, it's just like you can multiply whole effect over there. Other cool fact is that it's actually inflation hedge. What it means, if the inflation goes up, price of real estate and even the rents are going up following the same trend over there. Usually it's not happening like right away, but it's following. With a period of time, it will actually match up, which is pretty cool, right? Or if you think about it, there is limited amount of real estate that people might be getting. So that's why as an investor, you might be thinking like, in this location, people don't have any choice. And of course, there are locations that you can buy any house you want because there is so much for sale, or there is plenty of land for sale. But at the end of the day, demand is going up, and you as an investor, you are winning. Because if you buy today, like with the period of time, like after 10, 15, 20 years, it's gonna be way more pricey than today, right? Actually, you might consider to own land in your portfolio. A friend of mine that he was always focusing on land and so on, he was saying that if you do good deal, there is better appreciation. You don't have to be dealing with your tenants and problems, when you have a house and there is somebody living there and you have to do all the paperwork and so on. Plus, he was always saying, of course, this depends where you are living, but he said, if there is war and you have a house, and let's say the worst case scenario, it will just burn down, insurance company probably will not pay you off right away because they have another problems. But he said, land is gonna be land. Of course, if it's like land that, farmers are using, it might get destroyed and so on. He is meaning the land that you can put house on later on. One thing with the land, it's kinda harder to get the finances for it because bank is not gonna give you that kind of, conditions like when you are buying a house. The number one thing that is searched on the internet is that actually why is land so expensive? So there is something about that, but I think it might be pretty good to have something as a hedge against the inflation and so on. At the end of the day, I was hanging out with a guy that owns over 25 rental apartments. They are in worth about 2.5 up to $3 million. He's passionate about real estate and so on, and I was asking a couple questions, and he said that real estate, it's actually stupidly defiant. Let's say you buy it today, and you don't do any research, you just put money for there, you take a mortgage, there's bad interest rate and so on. But he said, with the time, you would be glad that you made the decision, because that's just with the real estate, it's stupidly defiant that later on, still it was a good deal to be in because it goes up in the value, of course not right away, but you have to hold it for a while. You don't have to be kind of the smartest person in the room in order to invest and be good at it. It's more about you, like how long you wanna be holding it and what's your investment horizon and so on. And of course with the real estate there are a couple downsides, global economy, it's depending on that, or interest rates and so on. But I feel these kind of problems are kind of just in short period of time, because if I'm planning to own something for 30 years plus, but in between there was something happening, I think I will survive. That's what I feel so. But of course you have to do your own research with everything and it costs time, but I think it's one of the best decision if you put time into what and where you want to invest and so on. So let me know which one you like the most. I feel the best is to kind of combine it, at least these three, but there is way more options that you can do. And if you like the content, don't forget to smash the like button and hit the subscribe button as well. I appreciate it a lot. And if you want to learn how to buy first rental property, you can always check it out. If you want to see what's happening in the world right now and the banks are collapsing and so on, you can check out my video about that as well. Thanks for watching. Until next time.